All right. Hey, everyone. Mark here, Mark P Markets. Thanks for joining me for another weekly Bitcoin stock market and gold dollar price action forecast. The goal of this stream is to gather clues to get a better sense of what's realistic for the coming week. Okay, so we're going to talk about this Bitcoin situation and the stocks and all other stuff. So if you're new to the stream, if you have a question about a stock or a coin or whatever, please share it in the chat now so that when I get through the chat, after I finish my analysis portion, which I'm going to try to make as quick as possible, then I can have questions in the chat to answer. I'm simulcasting on TradingView today, so it means I usually get a lot of questions. Again, if you have a stock or a market, please share one symbol per question so that it gives me a chance to answer more questions and it's fair to everyone that is watching. Okay, so with that being said, let's get started. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right, let me say hello to some people. Alex, hey, good to see you. Bart, hey, welcome. And Erhan, good to see you. Welcome. Erhan is a new member there. All right, cool. So let's first talk about the economic calendar because today is Monday, right? All right. So first here, let me get my chart up on the screen so that you can see Bitcoin. There we go. All right. Yeah, it's a little crazy there. We're going to talk about that situation. And let me just make another adjustment here. Hold on one second. And I'll get myself on the screen. There we go. All right, cool. Hey, everyone. All right, so first things first, economic calendar. Now, TradingView has its own calendar. Oh, let me adjust my microphone. If my sound is low, just say something. Otherwise, you don't have to say anything. Let me adjust it here. Hold on a second. All right. All right. So here's what I wanted to say first. Economic calendar. TradingView has its own. So you can check that out. What I'm looking for are important events this week that can be major market moving events. All right. This week, again, from what I can see, is a pretty quiet week. I mean, so tomorrow we have the Bank of Japan Governor Kuroda speech. Again, that's not a big market mover. Also, we have durable goods orders for the U.S. and non-defense capital goods orders. Okay, whatever. That's not a big market mover. We also have for Australia Consumer Price Index and the trimmed mean CPI. Okay, whatever. Again, not a big deal. On the 28th, we have Bank of Canada Consumer Price Index core. Okay, again, these economists, they try to sound smart. It doesn't. None of this stuff really. These aren't really market moving numbers. I'm only interested in what can give us a range expansion. Okay. Now, also on the 28th, we have the Fed monetary policy statement and the Fed interest rate decision for the U.S. Now, that is the most important piece of information we have for the whole week, is right there. All eyes will be focused on that. That usually comes out at 2 p.m. Eastern time is when the rate announcement is usually when that comes out. And then they usually have a press conference at 2:30. This is very important because if there's any change in any type of talk from Chairman Powell, and there's been some previous ones where they hint at something and then they take it back and then it's very vague. Okay, they change their rate hike schedule and they whatever. You got to watch out for things like that. Now here's the thing. Don't sit there and try to interpret it yourself and try to use logic and say, well, I think this and that should be that and blah blah blah. There's no room for logic in this environment. So the reason why I point out the news item is because you need to be prepared for a range expansion one way or the other. The idea is not to react. The idea is to be prepared. Okay, so like if you're in any kind of Forex pair or if you're in maybe a stock or whatever, you want to be aware that this number can change things quickly and you may have to make an adjustment in terms of your risk if things are going against you. All right, that type of thing. I'm not sitting here trying to trade a Fed announcement. That's a gambling thing to do. All right, so I just wanted to mention that. Keep your eye on that. That's the biggest item that we have this week. Otherwise, we are in a low volume, stimulus, complacent environment. Now let's get into Bitcoin here. Let's talk about this first. All right, again, for TradingView people, if you're just getting in here, would be a good time to start putting your questions in the chat. I usually get a lot of them on TradingView. So you could just start putting them in there now. When I get to the chat portion, I'll have some questions to answer. All right, cool. So let's get to Bitcoin first. And by the way, if you can, please press the like button in the other channel. I guess it kind of gives me more what do you call it, exposure on this platform with the way their algorithm works, whatever, it'd be helpful. All right, anyway, so Bitcoin first, right? Now look at this. I talked about the location. I've been talking about it for weeks. I wrote an article on TradingView yesterday, and I talked about in the article the 35K area being highly random, right? Because that's the midpoint of this range. Now here's a couple of things to keep in mind. Right now, you're going to see a lot of talk and a lot of hype and a lot of big mouths all coming out saying Bitcoin going to 50K, Bitcoin going to 80K. This is the next move higher. Don't miss out. You're going to miss the train. Nonsense. Where were these people at 30K? Where were they at 28.5? When we were going long, okay? We were going long. We had a couple of swing trades. The other day, Andrew sent out an Ethereum trade near this low. Okay, those trades are doing well now, but they didn't look so good a couple of days ago, okay? So a couple of points that I want to make about that is, yeah, I'm not sitting here saying, oh yeah, we make good trades. Hey, we have trades that stop out too. My point is this. We were evaluating the risk, okay? And I kept saying over and over, forget the candles. It's the location that you really had to pay attention to. And it wasn't taking out 28.5. Now, there's a common thing that I like to address often, and it may be hard to understand at first, but you have to understand something about a chart. Charts are not 100% perfect, right? Charts do have limitations. Now, I get all of my information from a chart. I don't go anywhere else for information. I don't read any news. I don't listen to anyone, okay? All my information comes from a chart. But I also know charts are imperfect, all right? And I'm not getting... Everything that I see in a chart is not everything that I'm getting, and I know that. So I have to keep that in mind when I make an evaluation. Now, when you see a candle on a chart, and this is the mistake that many people were making. Oh, Bart Guy sent me 100 coins. Hey, Bart Guy, thank you very much. From Uruguay, hey, mucho gusto. Thank you very much. You don't have to do that. I appreciate that. Okay, very nice. Thank you. Thank you. Very generous. So what I was saying here, with this Bitcoin situation, let's cover up what's going on right now real quick, right? Let's just cover that up and just see what this looked like the other day. This is what it looked like going into the close of the week. It looked like this, okay, like that. So we had that initial push, and this is where it was confusing. Some people thought maybe it was a short and this and that and blah, blah, blah. And I kept saying, it's not a short. The risk on the short side is very high because we can easily run the 40K. But here's the point that I want to make. When you see these candles, when you look at a candle on a chart, this information right here, all right, even the current candle, but this information that we're looking at is old information, all right? It's old. Even when it looked like this, that's old information because what a candle is a reflection of the orders that have been matched. So even right now, the orders that you see at 40K, 39.5, whatever it is, that's old because that is information that has taken place before, and that's what generates the candle. Reacting to old information can really put you on the wrong side of things because we're going to think now that, you know, reacting to something like this, oh, it's going to keep going higher. But this is old information. So my point is this. When you're trying to time markets, especially in the short term, you cannot react to what you see. Because like I said, the candles are old. And anything that's derived from a candle, like using an oscillator, that's really old. They smooth out the price action over 14 periods or 20 periods or whatever. That's ancient information. So when you make decisions, when you react to that type of stuff, that's why results are so random. Now, let's talk about where we are right now. Before you get all excited and think I'm going to say Bitcoin's going to the moon and all that stuff, because I'm not going to say that, you have to realize that as great as this looks, because it looks spectacular, right? A 4,000 point move in one day. We haven't seen this type of action in a really long time. We are at the range high, okay? The range high that dates back to what, June, maybe even back to May there. So that's still part of the consolidation. That's while it's nice for people that got long around 30K, like I wrote in the chat earlier, this location is a profit-taking location, not a risk-taking location. Now, whether long or short, I wouldn't short this either. Even if we were open to shorts, which we're not, I would not touch this thing short because it could keep going for one, right? And there's no reason to sell. It's just a vertical candle. Now, like I just said, this is old information. So what do we do? What do you do from here if you're not locking in profits? I mean, we had profit targets distributed all over the place here. I think we had one at 42K, which is, I think, our third one on a trade that we sent out weeks ago. Now, so what do you do here, right? Well, you have to look at what's ahead in terms of location, because location is very key in these areas. You know, people get wrapped up with their opinions and they tie up their logic and they say, well, you know, because of this situation, that's going to happen, and blah, 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 right? All nonsense. No one saw this coming. No one saw the news, that catalyst, that spark, that no one saw it coming. It's always the same story, okay? So again, it begins with the probability of the location. And at this point, you know, we're way beyond 30K. So now we're looking at resistance areas, right? Basically 40 to 41K, that's a resistance. So in this next couple of thousand points, I would be anticipating selling action, okay? Not vertical to 50K. Although it's possible, I think it's a low chance, okay? Now, I'm not going to take any trades on that, so it doesn't matter. As far as new trades go, and I know that's what everyone wants to know, what about the new trade? Am I going to miss out? You have to look for support levels because that is where the high probability is. And that's all I'm interested in, probability. I don't care about anything else. I don't care what people say. I don't care what the potential is. I don't care what the technology is. I don't care. I'm only interested in levels. As a technical trader, as a short-term market timer, I want probability to be in my favor because that's the best I can do as far as advantages go, okay? So there's only two levels now. As far as support, and that's this 35K area. 30, you could round that 35, 36, 37-ish, right? That's an old resistance. It's the old range resistance. It was like that midpoint of the range where I wrote about it was highly random. So, you know, anything can happen there. Well, we got the squeeze to the upside, too many shorts. Okay, so any retrace into this area would be a nice location for a potential long if the price action can prove itself there, all right? So that's one area. The other area, of course, would be another test of the 30K, which at this moment looks like a low probability that even go back there, but hey, anything is possible. So it's not about predicting, oh yeah, this thing's going to 30K next. It's not about that. It's about if it gets there, then I may have something to do, right? So right now, if it gets to 35K, I may have something to do. If it clears 35K and we test 30K again, I may have something to do. That's it. Otherwise, I have nothing to do. That's the way you have to look at it. If you're very reactive and you're, oh, screw this time frame, I'm going to go to a smaller time frame. I'm going to go to a 30-minute chart. There's more action there. There's more opportunities. Well, you're going to get yourself into a lot of trouble, especially if you don't know how to day trade, because those are day trade time frames. And there's a big difference in terms of the magnitude of risk. Someone had asked me on Friday about shorting in this area, okay? It was around this candle here. And I said, you know, if we were open to the idea, the only thing I would consider would be a day trade. And the reason, and I even said, the risk on the swing trade side is enormous. And now we're seeing that play out, okay? So again, we don't short it and we don't get in this thing's way. So that's my point on Bitcoin. If you missed it, don't feel bad because all you have to do is wait for the next opportunity. It may take a few days, right? And that's the whole point of doing the stream, is to get a sense of what's realistic and what to look for. It may take a week. It may take a week and a half to pull back, but you want to wait for that pullback. We get them. It just takes some time. So you have to be patient with that, okay? Patience is a big thing, especially in this environment, because this environment has been very, it's been really bending the typical logic that we'd expect from certain intermarket relationships. I'll talk more about that in a second. So let's go over to the NASDAQ here real quick. And I see your questions. Thank you for your questions. And I'm going to get to them in here in a moment. Oh yeah, and by the way, I always forget to mention this. If you want to mention what country you're from or what city you're from, I always think that's like a fun thing to do. It's just a fun thing for me to see, and it's interesting to see the reach, especially of TradingView, when I get people from countries in here that I'd never think would be on TradingView. So it's just always amazing to me. All right, anyway, you just got booted offline. Hi from Portland. Oh, you know, something weird is going on here with TradingView. But here, I'm going to try to refresh this. Hopefully I don't get kicked off. Let me see here. Okay, there we go. Let me know if there are any other problems. But it says I'm still streaming. So okay, cool. Anyway, maybe there's a lot of traffic on TradingView today. All right, so let's get to the stock market, and then I'm going to talk about gold real quick, and then I'm going to answer your question. So here's the Nasdaq, right? Now, this Nasdaq has been very, I have to say, it's been very strange. Now, you may look at the chart and be like, well, what's strange about this? There's nothing strange about that. Well, if you look at all these candles, they're very uniform, okay? They're all almost the same range. That's weird for daily candles. If you look at all the candles previous to that, they're not exactly uniform, right? You have big ones, you have little ones. They're all different sizes and ranges, which just seems more of like a normal type of market. This is very precise. So I don't know, I find that to be unusual because typically you don't get that, which gives me a sense of being artificial, okay? Now, that's just it's a worthless opinion, that's what it is, and I can't trade on that just because I feel that this move in the market is artificial. It has something to do with the FANG stocks and whatever you want to call it, manipulation, whatever it is, stimulus, low volume. I don't question it. The thing is, I just try to stay out of its way. So at some point, you know, this thing will pull back. And as far as swing trades go for stocks, I've been completely staying away from the stock market because I just don't like this location. Just like with the location with Bitcoin, right? Shorting into that low. I don't like buying highs. So the stock market needs to do one thing for me. It needs to pull back either to this area right here, which is what? 14.8, 14.9, basically 15, which isn't that far away, or to the 14.4 area, which would be this area here, which could be the beginning of a head and shoulders pattern if it gets that far, if it does something like that. Now, the mistake you want to avoid in this situation is, oh, it's strong, right? Oh, it's up 21 points. The Nasdaq never pulls back. You buy every pullback, blah, 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 right? That's gonna run out of steam at some point, and it's gonna break. That's just the typical cycle. Now, a catalyst can come out that no one expected, whatever it is. My point is, these prices on the Nasdaq, there's no support here. So why do I want to buy anything? I want to buy near a support, not a resistance where things can go against me right away and I'm going to second guess if I see a red candle right away. And also then you may say, well, why not short it? Because we are open to shorting the Nasdaq. In fact, we sent out a trade of the week a couple of weeks ago over here on this tweezer top, and it actually reached 2 profit targets before the 1/3 of it got stopped out in this move. So I'm open to a short, but there's just nothing here. That's not a candle to short. I'm not going to step in front of a level just because of a level. I need to see some sort of confirmation, okay, something. Even though again, like I said before, I know the information is old, that's the best I can do. I'll never know exactly what's going on because I can't see what's really going on in the order book. I can't see the accounts. I can't see the limit orders placed all over the place. I can't see the real size, and I can't see who the players are. So, you know, the best I could do is get some sort of candle confirmation, measure my risk, and if I can accept the risk, then I can do it. Otherwise, there's nothing to do. All right, so sometimes staying out of the market's the best thing. The thing you want to avoid is don't get opinionated. Look at the S&P, up another over 10 points today. Don't be opinionated by this. Don't be lured or sucked into this thinking, yeah, stock market's a great investment, just buy whatever. Now, before I mentioned that there's some strange behaviors going on. So let me talk about that before I get into gold here, because that's part of it. I want to show you the bond market, right? So this is the bond market, the 10-year note futures, and this is important, especially this week, because we have the FOMC meeting. Now, bond prices are inverse to yields. So if bond prices go lower, and we have a nice big bearish pin bar right here today, if bond prices go lower, which is what this looks like it's positioned to do, yields should go higher. Now, nothing likes higher yields. Nothing. It's not good for anything. It's not good for stocks. It's not good for banks. It's not, well, actually, it might be good for banks, but it's not good for a lot of businesses because they have to borrow the money and it's going to cost them more money to borrow, right? That's the big problem with higher interest rates across the board for borrowers. So anyway, that's what this is positioning. So now you would think, with a bearish pin bar developing on the bond market, with implying that rates are going to start pushing their way higher again, right? Take a look at the dollar index. with rates going higher, dollar should be going higher. Higher rates mean stronger dollar. That's a bearish candle on the dollar, right? So that's what I mean by mixed. It's very mixed. It's very unusual, right? So typical intermarket relationships are not intact right now. It could be a function of the low volume that we're in, right? Summertime, low volume, stimulus environment. Whatever it is, I don't question it and I don't want to get in its way. I just have to observe it though. I have to say, well, why is the dollar acting like this right here? That's strange. You know, usually these instruments like the dollar index or something like the bond market, that's usually participated by smart money, right? You don't have retail traders trading 10-year note futures, or typically you don't. So action that you see there, you can sort of say, well, you know, the smart money may know something, right? Again, you can't trade on it, but it's something to keep an eye on, because when these things realign, you know, then we'll have a clearer picture. But we have to wait until something clears up here. Otherwise, there's a lot of confusion. Now, that brings me to gold, because people usually, they get, especially when it comes to these economic opinions, they can get you into a lot of trouble, all right? Especially with something like gold, because you say, oh, with all this infrastructure bills and blah, blah, blah coming out of this country and all the money that we're printing and stimulus, blah, 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 that's inflation. And we've been seeing inflation all over the place, right? Look at energy prices and look at food prices. I see inflation. I go to the supermarket and I'm paying $10 for a loaf of bread. I see inflation. Meanwhile, so you go home and you say, gold should go higher because I see inflation. Gold is not going higher, right? What's up with gold over here? 1 minute, gold looks like it wants to go higher with a bullish pin bar, and then it gets ugly again. What is going on, right? That's strange. So, like I said, no opinions. I don't know where's gold going? I have no idea, right? Gold right now wants to pull back a little bit more. This is a bearish pin bar today in front of these previous bullish pin bars, okay? Also, dollar going lower, okay? Dollar going lower should be bullish for gold. Why is gold selling off with a bearish dollar? Makes no sense. So, levels, right? I want to know about levels. Where is a level on gold that I can consider if I'm interested in buying gold? Because I wouldn't short gold. So you look at the old highs over here in this area. What is that? 1794, maybe like the high 17s, low 18s. What's things at 1797 right now? So you're looking at maybe 1790s, 1780s for a possible high or low on gold. Now, all this can develop very quickly on Thursday, or what is it, Wednesday or Thursday, when that FOMC meeting comes out. I think it's Wednesday, the 28th. So things can change quickly. Gold can have like a 30-point move in one candle very quickly, right? So you need to be prepared for something like that. There's no buy signal in gold, but my point is, in this situation, because again, the goal of this analysis is to gain clues as to what's reasonable for the coming week, right? So gold is a potential long, just not right now, because it needs to give us a signal. It's just at a potential location. Maybe it goes a little lower and gets more attractive. But my point, like I said before, don't get mixed up in opinions, because these things are going to do whatever they're going to do. And when things get confusing, what do? We grasp for news. We grasp. I need information. I need control. I need to know what's going on. Let me turn on CNN. Let me turn on CNBC, right? Whatever. Wrong place to go. No mainstream news is going to give you the information that you need to make an effective decision in a random environment. So a chart can help with that enormously. That's the best a chart can do. Levels, trend. And then we can get some confirmation from there and measure risk. That's really the purpose or the information that we're looking for from a chart. Okay? Now, Gmail, Unity software. Okay, cool, no problem. Stream is very choppy today. That's trading, you know what? That's TradingView. I'm going to blame TradingView because, let me see. It says I'm still streaming. And let me see, is YouTube giving me a hard time? Let me see. No, it's not giving me a hard time. Let me check something else here. Nope. Everything looks smooth on my side, so I apologize for that. It could be, there may be a lot of bandwidth on usage on TradingView today because, when there's a move like that on Bitcoin, the whole world now has to share their opinion on it, because now they can try to take advantage of all the renewed interest. I don't know. Anyway, all right, so those are the main things I wanted to cover. Let me get into your questions now. All right, this is about the time I get into the questions. Let me jump into some questions. Again, I appreciate everyone asking all these great questions. So I'm going to start with this one with Alex K. Now he says here, what signs to watch out for in order to confirm we're out of wave 4? That's a very good question. Now that's referring to Bitcoin. So let's go back to Bitcoin. Thing is, wave 4 confirmation is not going to be until we clear the wave 3 top, right? Breaking out of the wave 4 confirmation. That's 64K. So you may say, oh, 64K, I'm not going to wait that long. Right, and you don't have to wait that long for a confirmation, but that's the confirmation when you take out the high of the previous wave, right? In this case, wave 3, which is up here. So, you know, in this situation, we have to assume that we're still in that wave 4 until such an event takes place. It doesn't mean we don't trade it. It just means that your expectations need to be in line with the wave 4. And right now, we have clear levels, right? 30K is the wave 4 bottom because it's proven itself, especially after this move. So that's still the bottom, 30K, between that and 28K, whatever. And then we have this 41K, which is being tested now, basically. And then we have 50K, right? Those are the levels. So we have to see the kind of behavior we get at those levels. You know, people are going to be very excited here about this attempted breakout. But if this thing fails here, that's just still part of the consolidation. So I wouldn't go nuts with this thing. I would just wait for a pullback and look for the next pullback, right? That's the more conservative and I'd say lower risk thing to do than trying to buy into this as a reaction to a large vertical candle going right into a resistance. So I hope that answers your question. All right, let's jump over to the other chat here. All right, G Manel from the Bay Area. Hey, thanks for joining me again, and thank you for the coins. I will get to your question. You just got booted. Okay, thanks, Todd. Let me know. All right, thanks for letting me know. So G Manel, if you can put in a stop gain order on your position, do that. Oh, he's writing to someone else. Below preview is a good place, okay, but look at the charts, or you may want to. Okay, so he's just helping out someone there. Thanks, G Manel, for mentioning that. Okay, cool. Anyone else having problems with the stream? Okay, Todd, yeah, I apologize, Todd. All right, so G Manel's asking for Unity software. Let's take a look at Unity. Again, it may be, like I said, the bandwidth on TradingView may be having a tough time today because I'm sure there's a lot of people streaming, I'm guessing, because I don't see any complaints on the other one here. I don't see any complaints at all. Okay, so anyway, again, I apologize for that. So, Unity software. Now, here's the thing with the NASDAQ. You would think, with the NASDAQ making all-time highs, like every day, all new time highs, S&P, NASDAQ, right? You would think these stocks would be doing a little bit better. But that's not very impressive relative to where the NASDAQ is. It's because the NASDAQ is being driven by the FANG stocks, which does not represent the entire stock market. So a lot of these other stocks seem to be left behind, right? I view that as relative weakness, which means no one is really buying. So to answer your question about something like Unity software, let's look at the structure, because again, no opinions here, just structure, right? Price chart, trend, structure, levels, and price action to give me a clue. You have the recent initial push, took out this resistance back here. Okay, all good. You have a higher low over here at 92.5. Okay, that's good. That's a sign that's usually a structure that follows strength. Now, you have this attempted push here of trying to push this little minor resistance at 107, basically the 107 area. Let's make this a little bit bigger. So you have basically what looks to be a bullish trend trying to reassert itself. But the next question you have to ask is, well, what is the risk associated with this area? Well, if you clear the 107 area, if you clear that little resistance, then you may have some room to run up until this, what, 115? But your risk is kind of high at this point because this leg is in place, right? The leg is established. So if you buy this now at 104, where do you put your stop on something like this? Well, based on this structure, it'd have to go at like 92.5. It's like 12 points. So you have to risk, at this point, you have to risk 12 points to hopefully make like 5 or 6, or what is this high over here? Again, 115. So, okay, no, you have to risk 12 to make about 10, let's say. So that's less than 1-to-1 reward risk. And even if you want to just kind of shape that, like just kind of adjust it a bit to be more 1-to-1, okay, but I would rather not buy into this high, especially with the NASDAQ where it is. I'm very cautious on new highs on an index, and a stock is not at new highs, right? So if the index pulls back a little bit, theoretically, this thing should pull back and test either produce a higher low or give you a double bottom. So I would wait, and something like Unity, I would wait for something like that. I would want to see the more conservative thing, wait for the higher low, which you can get around, what is this price here? That's around 100, let's just say high 90s, okay? 98 to 100, around there. Or maybe you get the double bottom around 92. Those would be your places to wait for. If you want to be really aggressive and jump in now, you're taking a lot more risk. So that's what you have to realize. Now, some people may be okay with that, or perhaps you want to adjust your size and maybe take a quarter of the position you normally would in case it pulls back all that 10 points, which, you know, can do. So that's the thing with that. I mean, me personally, I wouldn't take that type of trade until I had the pullback that I want. Sometimes you don't get the pullback, and that's okay. I'll just move on to another stock. I'll find something that gives me what I want to see. Okay, so thanks for asking the question. Let me move along here. Again, I apologize for if there's lag on TradingView. I'm not seeing any problem here. I'm going to try refreshing this one more time, but I apologize if there's like a lag on there. All right, let me jump over. So that was Unity Software. Okay, thanks for asking about that one. Let me see what else we got here. Okay, where's my TradingView questions? Wow, I don't have a lot of questions on TradingView today. So it must be because must be the technology over there. I don't know. I'm going to blame TradingView. I don't see any problems on my side here. What is the other platform you stream on? I can't tell you, Todd. I'm watching. Okay, this guy put it in there. Okay, if someone else puts it in there, hey, that's not me. Okay, anyway, cool. Thanks, Bart. All right, so let's get. I have some more questions here on this other one. Let's see what else I got. Again, I appreciate everyone's questions. So Bart from Uruguay, hey, welcome. Erhan, okay, hello. I said that earlier. David from Miami. Hey, David from Miami, good to see you. Must be nice over there. Jesse, hey, Jesse from Poughkeepsie. Okay, cool. Thanks for keeping me focused on risk. Well, that's good. I'm glad I'm helping you stay focused on risk. We should all be focused on that. Hey, Julio, welcome. All right, Schwartz. I got my Romanians here. If Schwartz is here, he's my representative from Romania. He represents all my Romanians from Romania. Hugs from Romania. What do you think of start selling BTC and buy back in a pullback? Or just, okay, good question, Schwartz. So back to Bitcoin. So like I was saying before, now if you mean selling as far as shorting, I would not, because even though the probability and the location favors that type of action, there's nothing there. So it's very risky. Just because we go to a level doesn't mean price will turn and reverse there, even though the probability favors that, right? It can go straight through. And on top of that, if it runs another 3,000 or 4,000 points, it may squeeze you out and then turn, right? So it's not worth all the trouble. What you want to wait for is something like this. Look back here, right? When it touched up here before. Gives you like a little, almost an inside bar, right? Doji indecisive situation. Maybe we get something like this again, okay? In the same area. Maybe we get something like that. That would be, if you're interested in shorts, that would be at least you have some sort of price action that's confirming that the bearish momentum may be coming back in. At least you have that. Now, just to be clear, we don't short Bitcoin, okay? But it doesn't mean you don't have to. If you were going to do it, or if I was going to do it in that type of situation, I would at least wait for that, because I don't want to get caught in a vertical move, right? These things can be irrational for as long as they want to. And I mean, look at the stock market. How many people are probably caught short in that thing because, oh, how much higher can it go? The thing is ridiculous. And I don't think it should be this high, but my opinion doesn't matter. My point is, it can keep going for whatever reason. I don't want to get caught on the wrong side of that. So same thing here with Bitcoin. You don't want to get in its way. So I would say wait for confirmation if you're interested in selling it. Now, as far as buying back or buying for inventory, I always say this, you can buy at any price when it comes to inventory, because inventory is long term. The key to managing risk with inventory is size. Now you're at a high. So here, let me give you an example. So let's say you're interested in inventory and you were buying your normal $100 worth, right, or near that 30K area, but now it's at a high. Should you buy $100 worth? I mean, you can, but it would probably make more sense to maybe buy $50 worth, assuming you had $1,000 to invest and you were going to spread 10 purchases out of $100. This might be a situation, instead of 100, maybe you buy 50. Why 50? Because it's near a resistance and it's more expensive. So buy less of it, not more of it, right? And that helps you manage your risk. What if this thing turns around right here tomorrow and is back to 30K, by Friday? What if that occurs? It can happen. It's not likely if this momentum stays intact, but anything can happen. So that's what you have to focus on the risk for. Forget the reward. The reward comes when you manage risk effectively, right? Focus on the risk. So that's what I would say to that. I wouldn't sell into that and then looking for a pullback to buy into the whatever. I would just wait for the pullback and then look for swing trades along. Or if you have an inventory plan like you're trying to work, then I would just look for lower prices and wait, for a better price. Or one thing you could do, if you don't want to wait for better prices, then throw price aside, forget price, and use time. So you say, okay, on the first of the month, no matter what the price is, I'm buying $100. And on the 15th of the month, I don't care what the price is, I'm buying $100, right? If you were doing that all along here, you'd be buying lower and lower prices, right? And maybe you'd be getting like a higher price in a pop-up. But over time, you will have an average price. And if the broader trend reasserts itself at some point, you'll be happy you average into it at a generally lower price, because these are certainly not market highs. These are market lows, right? But that's a game you want to play in an asset, something like Bitcoin, which is still highly speculative, but at least it's the leader in its space. I would not play that game with something like let's go to a junk coin here, VeChain, right? Look, it's going to look similar to Bitcoin. Watch. Oh, look, they're all rallying, right? What a surprise. But I would not average into something like VeChain, or because they're garbage coins. Okay, like they're just whatever. I have no belief in those altcoins. So if you're gonna play that game, the inventory game, do it with a leader. Bitcoin, Ethereum, even Litecoin, right? But when you start getting into those penny stock type of coins, those low grade, third tier hype coins, then I would not do that with those. You want to do it with a high quality asset. And like I said, Bitcoin is still highly speculative. It's not equivalent to an investment grade stock, okay? Just something to keep in mind when it comes to risk. All right, so good question. All right, let me see what else we got here. All right, so Bart, I would love 1 inch. Is it 2? Okay, let's take a look. So a lot of these altcoins, because again, Bitcoin is the leader. And a lot of times when I put out analysis, I always mention whatever I say for Bitcoin pretty much goes for the whole space, right? You get some occasional coins that do their own thing, but it's unusual. So let's take a look at 1 inch, right? So 1 inch, and let's see, right? It's going to be similar. Now look, it's got the pop-up like Bitcoin. These things aren't as dramatic. I mean, Bitcoin's up 4,000 whatever points, okay? This thing is up, 24 cents? I mean, I guess percentage-wise, it's the same, right? What's the percentage of Bitcoin? 12%? Yeah, it's the same percentage. So, it's the same situation. You can wait for the pullback, just like I explained with Bitcoin. But since this is such a lower-priced coin or instrument, I mean, you could probably afford to take a little more risk on something like this. I mean, the thing is what is this thing again? It's $2.29 is the price of the coin. So, you buy $100 worth, and who cares, right? So if it goes the wrong way on you, how much are you really going to lose? As long as you're not throwing in $10,000, right, into something like this. So you could keep an eye on that. But here in this situation, for something like 1 inch, use Bitcoin as your guide. Now, this is a good time for me to demonstrate an example of, that Bitcoin chart that we've been evaluating. I mean, I write my analysis every week on TradingView on that Bitcoin chart, 30K, 30K. I kept talking about 30K, 30K. Now look at this chart. So if you just focused on this chart and you said, oh, wow, look at this. Took out this low over here, $2.07, took it out. Oh, I got to get out of this. This thing's garbage. Bitcoin turns around, and what do we have here? We have a reversal. So it doesn't matter what these charts really say. So all of these experts and all of these gurus and all these other people that talk about these coins and then they bring up these charts doesn't really matter because they're only going to follow Bitcoin anyway. So if Bitcoin doesn't fail, as bad as this thing looks, unless there's some really negative news on this thing is not going to fail either, right? And here we are. Here's the proof of that. So just something to keep in mind with those altcoins. All right, so thank you for asking about that. Let's see what else we got here. Has everyone left my TradingView channel? I think everyone left. Man, sorry about that TradingView situation. I have no control over that. But anyway, okay. So back to my other question here. That was 1 inch. We always press the button. The first thing, we always press like button. Oh, appreciate that, Travel. Thank you very much. I appreciate that. Julio, any advice on SGOC? SGOC, is that a stock or is that a coin? If you have coins, like just make sure you put USD after it so I know, so I don't talk about the wrong symbol for 3 hours. SGOC, I'm assuming you're talking about this stock over here. Correct me if I'm wrong. I'll check the chat more frequently. Just let me know. So SGOC, I'm assuming you're talking about this. And his question here is, any advice on SGOC? Well, obviously this thing looks like it had news recently, if this is the right chart. Look at this nonsense, right? Nonsense. If you're not in at the bottom of that, if you're not in before that hype, and you're not out somewhere in that hype, you're stuck in this thing, right? Because this is a hype. Whatever this is, I can just tell by the chart. I don't know what the news is, but all I can tell you is that there was news and it was hype, because look where the chart is now. So as far as advice on this thing, I don't know anything about them. But looking at it from a technical level, I would wait for more stability. You have a lower high right here, which is not exactly what you want to see in something that's strong. Now it's trying to give you a double bottom, possibly right here, in a potential support area. And you can consider a very aggressive trade here. The thing is, this thing looks wild and it looks like it was hyped. So technicals may be less reliable in this type of situation. So a more conservative thing to do would be to wait for stability to come back. What does stability look like? What am I describing here? Well, wait for a series of green candles to develop. Perhaps you get a little mini high or low over the next week. The most conservative thing you could do is wait for it to break this high, because something that's weak should not take out a resistance. That high is around 15, 14. Something that's weak should not do that. So if it breaks that, that is demonstrating strength. Now, some people may get frustrated and say, well, I have to wait. This thing right now is at $8.57. I have to watch this thing run $7 without me, then get interested? Well, yes, sometimes you have to forfeit the better prices, because what you don't see is the risk, right? You say, well, that's a great price. If it runs to $15, I want to be in that. What if it doesn't run to $15? What if you buy it here and it goes all the way back to zero or whatever? What are these low prices here? $3 or $4. What if it does that instead? At this point, anything is possible here, right? Because it's not really demonstrating anything except a lower high and a possible lower low. So sometimes when you forfeit a good price, you're forfeiting that for a better environment or a more supportive environment. So you don't have that here yet. Now, if you're aggressive and you say, well, I don't need to forfeit nothing, I'm aggressive. Okay, well, you can consider that as a possibility. Just be prepared to get out quickly if this thing starts pushing lows. Right now, that low is 788. I'd give it a little more room, because that's very easy for this thing to reach. I mean, this thing right now is at 857. That's like, what, 70 cents, 80 cents, or whatever? It can do that pretty quickly based on what I'm seeing here. So that would be a more aggressive, consideration. All right, so thank you for asking. I hope that's the right symbol. Okay, cool, Julio, thanks. All right, so that's your answer. Thank you for asking about that. All right, let's see what else we got here. Okay, cool. Oh, thanks, Gmail. Thanks. Someone's watching me on TradingView. Okay, cool. Thank you. Let me see what else we got. So that was SGOC. See, what I like about doing these streams too, by the way, is people point out some of these stocks. Like I haven't been following SGOC. So we all get to see some things that are going on out there that otherwise we may not have noticed. Let's see what else we got. So Sour. Okay. Yeah, I don't know about that. BCH is going to follow BTC, right? So wherever BTC goes, right, it looks all spectacular now until BTC gives it back. So I wouldn't go crazy with this. Like I said, this one especially. Use BTC as your guide. All right. Let me see what else we got here. Vince, will ADA follow the Bitcoin trends? Okay, good question. All right, cool. So let's take a look at Cardano. And like I said, with most of these, Cardano is a typical follower. As you can see, it looks very similar to that Bitcoin situation. It looks very similar to the chart. And it's going back to its range high, just like Bitcoin, right? So in this situation, just like use Bitcoin as your guide, right? Like all the other altcoins. Not a great place to be buying, not a great place to be putting on risk. If you are not willing to put on risk near a low where typically the location is more favorable in terms of reward risk, but you're willing to put on risk now at a place where, and I'm not saying you particular, but people are willing to put on risk now at a low probability, higher risk location, no good, right? But again, that's a result, like of what I said earlier, reacting to what you see. You have to look at the location and you have to be prepared to work this thing when it looks like that, okay? Not necessarily jump in front of that, but when you get something like this, which that was pretty clear on Bitcoin, right? And we took the Ethereum trade based on that situation. That's where your risk reward is the most attractive. Now, when it's obvious to the rest of the world, now you're taking it off the hands of the smart money or the people that were in way before you, and now you're assuming all the risk at the worst price. So it doesn't mean it won't keep going, but my point is the risk is much higher here. Wait for a pullback, like Bitcoin. Wait for a pullback. I think you can get a pullback into the midpoint of the range, possibly, or back to that low. The midpoint of the range, I always talk negatively about that, but it's not necessarily negatively. I talk about highly random, because anything can happen around the midpoint. It's highly random, right? It may go your way, it may not go your way. It's like a 50-50 thing. But if this thing could break out, try to break out sort of like Bitcoin is doing, and then pull back into that midpoint, a lot of times you will find support there. So that would be a good location to look for buying activity or some sort of price action confirmation for a new long. Also, when you have the confirmation, that is what allows us to measure our risk, okay? And we can define our risk and say, okay, I can risk this, and this is what my reward potential looks like. Am I willing to take the risk, yes or no? That's the time to ask that question, right? When you're at such a level. Now, this is all about the risk is too high. Like I wouldn't even, just like Bitcoin, I wouldn't even think about buying these prices. Not for swing trades. Okay, so thank you for asking about that. I'm sure a lot of people are wondering the same thing. Okay, so Bart, on BTC, should we wait for something to take profit? Okay, great question, Bart. Back to BTC. Great question. So he's asking, should you wait for something to take profit? Here's the thing with something like this. We have profit targets. When we send out swing trades, we have profit targets, usually 3 of them, and they're spread out, around these prices. So we're taking money off the table, no matter what the thing looks like. If it gets to our price, we're out. And that has benefited us enormously many times, especially when it does this next, right? So to answer your question, there's 2 ways you can go about it. You can put profit targets out there, right? And take some money off the table. But something like this, you should have taken something off the table. When it goes vertical, right into a resistance, it's wise to just take a little something. Even if you don't want to, take a little something off the table. Reduce risk. Give it to all those people that are willing to buy it now and take that risk off your hands. Now, the other thing is, if you want to let the market, you want to give the market a chance to pay you more, that's when you can consider the manual trailing stop. Now, for something like this is going to be tough on the daily chart. So what I usually do is I'll go to a smaller time frame just for this purpose. We could take a look at an 8-hour chart, okay? You go 2 candles behind and you can trail your stop there manually. So what would that be? 37,732, around there. And if it keeps pushing highs, you just keep putting your stop. At some point, it's going to stop you out. Now, the trade-off is, by doing this, you're not going to get the highest price, but you're giving the market an opportunity to pay you more if this thing wants to go vertical. Like if it wants to go stupid vertical, which I've seen it in the NASDAQ many times, if it wants to go stupid vertical like that, why not get paid, right? Now, so you're giving yourself the opportunity to let that happen. Now, sometimes when it does that, and you happen to be in it, if it gets like ridiculous, you're just better off just take the money. How often do you get like a 4,000 point profit? Just take it. Okay, the probability of that is so low. Just take it. But my point is, you let the thing run, and at some point it turns around, taps you out, and it would normally be at a higher price than where you normally would have put a target, right? So you're just giving the market a chance to pay you if it wants to. Well, like I said, you're never going to get the top. You shouldn't be aiming for the top to begin with, because that's part of the gambling mentality. Trying to get a top of a market or of a bottom of a market is the same as gambling. It's a very low probability thing. So thank you for asking that question. All right, let's see what else we got here. So Jesse, what about the level 2? Can't we see? Good question, Jesse. He's bringing up the level 2 quote. That's very popular, like on stock trading platforms, right? Day traders talk about it all the time. Reading the tape, they call it. Well, here's the thing. What you're seeing on that level 2 is there's no advantage. One time, many years ago, there was an advantage to reading the level 2. Today is so much noise on that thing, it's useless. It's no different than watching the order book like on Coinbase Pro or on Binance, watching that order book and thinking that all you're seeing are trades being transacted. You still can't see the accounts. You still can't see who they belong to, how much money is in them, what kind of positions they're carrying. Like, is this big account, is he short and it's really against him and he's about to get squeezed, which can cause more buying? Or is he long and he has a huge position and he's long and he may start selling soon, right? I need to know that information. That would be helpful information. You can't get that information anywhere. Brokers have it, right? Coinbase has it, but they're not going to share that with you. That's non-public information. That type of information would make a level 2 valuable, or any type of price, any type of time and sales information that we could see on a platform. That would give it value. Otherwise, it's useless. It provides no advantage, and it just kind of gives the illusion. It's an illusion of you think I see every order that's being matched. And yeah. It's the same as watching a candle on a chart. It's the same thing. It's old information. It's matched. It's over. We need to see what's ahead, not behind. Okay, so I stress that a lot because I just really want to drive that concept of we need to see ahead. We need to gain a sense of probability of what's likely to be ahead, not what's behind us. Okay, and oscillators are notorious for showing us what's behind us. So thank you for asking. It's a very good question. Kavi, can you, for the S&P, I have read that 440 is an important level as it is measured move and also upper boundary. Okay, March 2020 low. Can you please comment if there's any way at all to calculate levels at all-time highs? I'm not sure what you mean by calculate levels, but let's take a look at the S&P. So, well, when the market like this, so he's talking about the March 2020 low, right? I mean, let's zoom out on this chart. This ridiculous move, by the way. Now, this is a result of stimulus. I mean, the U.S. government has been nothing but stimulating and sending us checks and all this free money and blah, 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 right? It's nice to get the money, sure. I'm not complaining about that. But at some point, that party has to stop. And the market is probably not going to take well to that. That's the thing. But, these when it gets into politics and stuff, they don't care. They're just trying to do whatever they can to, win elections or whatever. I'm not going to get into that. But my point is, he wants to know, is there any way to measure with something's at all-time highs? The only way you can do that, the only tool that you can use is really like a fib extension tool. And I'm not going to get into the details on that, but if you measure, like with an extension tool like this high back here, what is this, 43.92, and you measure it from this low, you're going to get a bunch of levels, right, that are going to appear up in here. So that's what you want to look for, the extensions, and those are potential inflection points. Now, whether the market acts at one of those points or not is a different story, but it at least gives you a proportional point of reference. And that's when you're at something that has no historical price action, like the S&P, right? These are all-time highs. That's really the only tool that can provide some kind of potential of, well, where's the next level on something like this? Where's the next level for where I can anticipate some type of particular price action, whether it's selling action or buying action. All right, so thank you for asking about that. Okay. Mr. Plow, stream quality is just worse here than on other platforms. Oh, okay. Okay, okay. PLTR. Okay, so Gmail asking about PLTR. All right. I appreciate letting me know about the TradingView situation. I guess I'm guessing it's a bandwidth situation because I'm not getting any complaints anywhere else. Okay. All right. So Palantir, just like Unity, right? Similar situation. Now the Nasdaq. So whenever I look at a Nasdaq stock or tech stock or whatever, the first thing I want to know is, well, how's the Nasdaq doing? Right. It's the first thing I want to know because that's a big factor. All-time highs, right? 15,124. Wow, this thing's been at the same price the whole time I've been doing the stream practically. So back to Palantir, theoretically, this thing should be much higher if it's following the NASDAQ. So obviously it's not, which it could be relatively weak. This type of relationship is something I always resort to when it comes to stocks because when the party is over, these relatively weak stocks are likely to sell first, right? Doesn't mean I'm going to short them. It just means that I don't want to be very optimistic about them on the long side. So with that being said, that kind of gives us a sense of context. Context is very important when you have to think about things beyond a chart. Like I said, charts are not perfect. So there are some variables that it helps to consider context, which can kind of put the chart data into a slightly better perspective. Now, so just like Unity, you have the initial bullish leg, which took out these resistances. Okay, that's all good. And you have this attempt at a higher low situation. That's good, technically. And today's candle, if we zoom up to that, right, this is a buy signal, which took place at 22.30. Well, no, I'm sorry. 22.08 was the buy signal. This thing right now is at 22.13, so it's just beyond the buy signal. A stop or your risk should be defined by 20.5, this swing low over here. You don't want to put it right below your candle because it can easily touch that, right? It's got all this room to play around. So the stop really should be here. This is where your risk should be defined from, that swing low, because if it's going to stay strong or if it's going to follow through on this higher low, it has no business testing that low, right? So that's a good place to put the stop, slightly below that. Now, theoretically, higher low should lead to higher high. So as far as your chart structure, yes, it's a bullish structure. You're buying after a pullback and starting to show signs of stability. You can define your risk and your reward potential is decent. Can we get better than 2 to 1? Well, what's the risk again? The low is 20.55. If you're buying this at 22.13, you're looking at maybe $2, 2.25 risk. Can you make 2.25 on something like this? These highs here are around 26. So you're looking at, that's like a $4 potential, right? What is this here? 27.41. So you're looking at $4 or $5 potential. The reward risk is at minimum 2 to 1. Okay, I think 2 to 1 is within reason. And that's if you're getting out in the middle of the range, you're probably about 1.5 to 1. So that makes sense all around. This would be a good one for like trade of the week or a potential swing trade idea. It fits all that criteria. But like I said, one risk factor that you must keep in mind is that NASDAQ. What if the NASDAQ on FOMC day, on Wednesday, what if it pulls back 300 points? How is this thing going to behave? All right, that's just one thing to consider. If you're okay with that risk, then this thing may not pull back the 2 points, right? And maybe it holds up if in that type of situation, if that occurs. Maybe the NASDAQ will run up 500 points at this rate. Right? Maybe the Fed will say, we're never raising interest rates again, and we're going to just print money and send out another check, right? And the NASDAQ will go berserk, right? It'll be at 16,000 in a blink of an eye, and that should be a positive for tech stocks. I'm exaggerating, but that you get my point. Okay, so thanks for asking about that. That's a very good one. I'm glad you brought that up. That's a nice example of a potential swing trade idea. Okay, Gmail. All right, so I moved over. Okay, Todd's no problem. These guys should have used the money they paid that rock climbing fellow for a point. Really? I didn't realize they. I don't follow where TradingView advertises, but that's funny. Okay, well, Gmail. Yeah, gonna have to complain to one of their employees about that one or whoever. Well, anyway. Thanks for mentioning. All right, cool. So let me see what else we got here. That makes me laugh. So shorts. I don't know how to short or take long. Just buy and sell. All right, Schwartz, I'm not sure what you mean by that. I don't know how to short or take a long just by, oh, I guess he's joking. Okay. All right. Would it make sense to buy Ethereum against Bitcoin? Kavi asks. To buy Ethereum against Bitcoin, do you mean ETH against BTC? So let me see. Let me pull that up over here. ETH, BTC. Now, so if you're asking about buying this cross pair, I don't like cross pairs, especially these, because really it's about one moving faster than the other. I'd rather go straight to, either you're buying Ethereum against a dollar, or you're buying Bitcoin against a dollar. I wouldn't mess with this because for one, it's confusing. It's another layer of complexity. And theoretically, yeah, sure, it makes sense. You're buying a pullback on Ethereum, right? That's what you're buying, but you're buying it in terms of Bitcoin. But if Bitcoin continues to move faster, then this thing should go lower. Now, when you think about it, where Bitcoin is, I would expect Bitcoin to move slower, which means this chart should probably start working its way higher. But like I said, it can be very confusing. So I just would avoid that pair. We can observe, just from a technical point of view, this is one gigantic consolidation, as you can see, right? It's one big triangle. And typically those type of triangles are trend continuation patterns. You would need Ethereum to start going berserk again and outpacing Bitcoin, and you'd get the breakout of this triangle, which theoretically should lead to a higher high. But that's what you need. You need Ethereum to be moving higher faster than Bitcoin. All right. So technically, though, that candle is not a reason to buy and all that other stuff, like I just mentioned. Excuse me. So thank you for asking about that one. I know that could be confusing for many, but it's like a forex cross pair. Buying like the euro against the pound. It's like one has to move faster than the other. I find it confusing, and I think it's just easier to go for the currency against a stable coin, right? Bitcoin against dollar, Bitcoin against Tether, or something that's stable. It doesn't really move. It's just a lot easier. All right, thank you for asking. All right, let's see what else we got here. Do you think the rise in BTC could be a hunt for bears in the leverage market? It could be anything. I have no idea what's behind it. I think there was some news. Obviously, I don't know. It could be, but you know what it also could be? A lot of shorts, right? A lot of shorts were too heavy into this thing. Too many people with opinions, and when they all get squeezed, when there's some kind of catalyst that no one was expecting, and they all have to get out at the same time, this is what you get. All right. I mean, we saw something very similar to this in a coin called AXS, which someone here brought up, and he had told me that he had shorted it and he lost a lot of money or whatever. And the thing was vertical, right? The thing was vertical, and I think what you get in those situations, no different than like AMC or GME, there's a large short population, and they get squeezed, and that's very possible. That's what's going on here, but I wouldn't bet on that. I wouldn't assume that that's what's going on and then bet money on that. I just have to go by the price action, the information that's available, and then using that within the context of levels that can affect price in the future. All right, if that makes sense. So thank you for asking about that. David, Bitcoin needs to test 200-day MA. I mean, I don't know where that MA is, but that's one. What gives that any value is the whole world uses the same one, right? That's why you may get a reaction there, but it doesn't always guarantee a reverse there. Just same thing as any other type of level. Like you may see like a resistance level and say, oh yeah, it should turn there, and it may turn. Just like, look, when Bitcoin was testing 50K way back when, I was anticipating a long there. All right. Was I right? No, I was wrong. This thing broke right through and kept going. And then I figured, 40K would be the next place for this thing to hold. Well, I was wrong about that too. Went below 40K and it found support at 30K. So, hey, I'm not always right. Were those levels that I should not have anticipated? Well, no, those were the levels. But then the market proved otherwise. The market is always right, not me. So that's what you have to keep in mind when it comes to like a 200-day moving average or a particular level that's in play right now. That's what you have to keep in mind. All right. So thanks for mentioning that. Julio, okay, okay, that was from before. Wedge, okay, no problem. Thanks, Wedge. Everyone's cool. Let me see what else we got here. When is the right time to go long on F? All right, Julio, it's a good question. F for Ford. You know, these things recently, Ford has been like in play. It had an unusual move for something like Ford. But all right, so that's an interesting question. General chart on Ford, general chart has been strong. Higher lows and higher highs. Can't argue with that chart. Okay, no problem. I'm not arguing with it. Now, here's the next thing. Levels. So it found support. Look at this nice pin bar. Beautiful pin bar. Off of this support level. Okay, look at that. Off of that support level. That's what I mean about levels and confirmation. So got that. Now, this thing popped off of that recently. Right? I guess a previous week. Okay, fine. Now, you got this little mini high or low situation. So he's asking when's a good time to get involved in Ford. Well, this is not a bad time right now, but the real question is what's the risk right now versus what the risk may be over the coming days. Keep in mind, the FOMC meeting, if there's any talk of interest rate, blah, 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 if there's any funny talk, something like Ford can be seriously affected because obviously a company like that borrows a lot of money. So here's the thing. You can measure risk just like Palantir. You can measure risk from this low at 1280. This thing right now is at 1403. So you're looking at $1.20 risk, maybe $1.50 risk if you buy this thing now. There is a little mini buy signal in there. And you're assuming, or you're betting, that this thing is going to take out these little mini resistances and start another leg higher, right? That would be the assumption in that situation. So, and you're risking that. Now, that's right now at the moment. If this thing pulls back a little further, it's possible that you get a little mini high or low in this area here, which is around 13.5, something like that, which is not really a big difference. So that's something you can consider. If you're more aggressive, you can consider it now. But your risk is going to be measured from that pin bar low. If it takes out that pin bar low, you have to get out if you're in it and take the loss. Just like, let me give you an example. AG, which is a silver stock, right? Called this one. I sent it out to people. I sent it out as trade of the week. Stop loss is at 14, takes out 14. People were asking me, it's taking out 14. What should we do? I said, well, get out. It's a stop loss, right? Don't hold this thing. Has no business being at 14. And this thing went as low as 1237, and now it's trying to turn. But I'm not interested in this piece of garbage now. Yeah, it's a little higher low situation, but after breaking that support, this thing is suspect. It never should have broken that support. Okay, so anyway, going back to Ford, that's a situation you have to be careful of in Ford. If it takes that out, step aside and wait until it starts to improve. Otherwise, in this situation, you're risking about $1.20, $1.30, whatever, and you're looking to make at least that. What are these highs here? 15.5. What's this high here? 16.5, and you'd be buying around. So 1 to 1 or 1.5 to 1 is realistic on something like Ford over the next week or two. Again, you're going to need the stock market to agree with you on that. And the stock market, like I said, is at all-time highs. Why isn't Ford at all-time highs? So that's another puzzle of that's another piece of the risk puzzle that you just have to keep an eye on. It doesn't mean avoid all trades. I mean, personally, me, I'm staying away from these things because I don't trust where the stock market is. But I've been saying that for a while. I'm very conservative. What am I going to do? I miss a lot of stuff. What am I going to do? But if you're more aggressive and you want to give it that try, that's what you have to watch out for. So thank you for asking about Ford. It's a good question. Okay, Kavi, hey, no problem. Schwartz, I just buy on Binance and sell when it gets higher or take profits. Okay. No. Okay. Oh, well, I'm sorry, Schwartz, man, you need to relax there a bit. 50K. All right. Well, I'm glad you're up, but I think Kavi, I keep calling him Kavi. Schwartz, what might help you is just more attention to risk. Just more attention to risk. You don't have to be like an expert with charts. You don't have to know a million oscillators. You don't need to know all that stuff, right? To make money. Really, you don't. What you need to be good at is assessing the risk and then the willingness to let the market pay you. It may sound to you like, or to people listening, well, of course I'm willing to let the market pay me. Not if you're in the hole and you're minus $2,000 or whatever, you're minus a lot of money, and then you get a chance to make that money back. First thing you do, get out. Broke even. Meanwhile, the market was willing to pay you more, but you were so happy to break even that you got out. Why does that occur? Well, it's because you made a bad decision to begin with. Not you, I'm just saying, you know, we get into these situations where we're happy to break even because we took pain. So we have to learn to let the market pay us if that's what it wants to do. It doesn't always pay though after you take all the pain, but that's what you have to get good at, really, is the risk assessment. And charts can be helpful in that process. I don't want to be one of these people that say, oh, charts, you know, expert chart, blah, 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 and I'm going to give you the magical oscillator and it's going to solve all your problems. And I'm going to program a bot and it's going to solve all your problems. Don't give in to those gimmicks, please. Okay, so let me see. Bart, can't use stop loss on shorts? I don't get the difference too long in terms of risk management. Can you explain? Okay, Bart, I'm not sure of the question. Can't you use stop loss on short? Yeah, you can. So maybe he's referring back to Bitcoin. Of course you could use stop loss on shorts. But the thing is, the reason why we don't short Bitcoin, you can use a stop. What does that become, right? If you have a stop loss on a short, it becomes a buy order, right? So that's going to obviously add to all the buy pressure in this situation, just to be clear. But we don't short Bitcoin for a number of reasons. The number one reason is leverage. We don't like to use leverage in this particular market. There's too much event risk, okay? Like a stock. We don't short stocks, individual stocks, most of the time. If we're going to do anything with stocks, we'd rather short the index, or we'd rather use options on a stock because of the event risk. All right, event risk, someone on, you know, Bitcoin's fooling around 30K, a major support, and someone comes out and says, oh, I'm going to invest $10 billion in Bitcoin, blah, 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 blah. Or some country comes out and says, we're going to replace our currency with Bitcoin. Now this thing goes to 40K in an instant. So too much event risk. And the thing is too, there's no regulation. So if there's any manipulation, which there's a lot of in the Bitcoin space, there's nothing you can do about it. So there's no incentive to get big unless you have inside information. So I'm sure the many insiders, they know what's coming out in advance, so they're taking a lot less risk and they can get big. But if you don't know what's coming out next and you have to rely on charts and everything like we have to, you can't get big because the risk is enormous, especially on the short side. Okay, so just wanted to point out. I mean, it also depends on your risk tolerance, but we're not willing to take that risk, not for this market. So thanks for asking, if I answered that correctly. Todd, okay, at 33K, 32, and 30, and then sold 1/3 at 35K, another third at 39, keeping the other third to see. Great trade, Todd. Great trade. Now, how did you know to do that? Was that something you learned from watching my videos or anything, or is that just something you knew how to do? That's a great, you can call that almost like an averaging sort of swing trade, because, I mean, for position trade, you don't sell. But for a swing trade, yeah, you start taking profits. Especially 35K was a good price, and 39K is a great price to take something off the table. And now you let some of it run and see how far it wants to go. You let it pay you. So very nice. And either way, you're now a strong hand because you've locked in profits. So even if it pulls all the way back to where you bought it, you're still green, right? If possible, can you have a look at copper? Kavi wants to see copper. Sure, no problem. BTC. Oh, really, Jane? I got to take a look. 2,000, yeah, but 2,000 points is hardly anything on this chart. What's this thing? Oh, it's minus, okay, it's 3,000, it's up 3,000 points. What's the high here? 45, okay. Yeah, I mean, you know, that's really not a big movement, relatively speaking. Intraday, sure, that's a lot. But thanks for pointing that out. Let's take a look. Oh, cool, Ted. Oh, I'm glad you've managed to shape your thinking in that way, because that's not typical of the herd mentality. That's great. That's great improvement. Copper. So what is copper? What's the ticker on that? Is it HS1? No. What is copper? Let me see. I know it's H something. Can you give me the symbol? Is it HC1? No. I don't know the symbol for copper. You're going to have to, well, I just type it in. What's wrong with me? It's Monday. It's Monday. I can't think on Monday. HG. Never mind. HG. I can't think on a Monday. I can't think and do a stream at the same time. How about that? Okay, so copper. Wow, look at that. That's not inflation, is it? Inflation is transitory. and transitory, right? Oh, look at copper. Wow, copper. Don't ignore. We'll just call that trans. I'm just joking. It's just the funny portion of the stream here. Okay, so let's take a look at copper. Yeah, look, higher lows, higher highs, right? No question. Bullish chart, and look where it's going now. It took out this resistance right here, which is that may be where people may have been shorting it, right around $44.40, and it cleared it decisively. So that's a change of structure, right? Kind of like what Bitcoin is trying to do. It's a change in structure. So what do you do with copper now? Do you buy this thing now? No, you don't buy this now because you're going into these resistances. Now, can copper keep going? Sure it can. I mean, the general trend is bullish. Bullish. So theoretically, it should go for the higher high, but it may not go in a vertical straight line. That would be a lot to expect. So what? Look for the pullback. If you're interested in buying copper, don't buy the vertical high like this. Buy the pullback. This right here, this old resistance would be a great spot. And that's, again, around $4.40. That would be a great spot to be looking for a buy signal. Somewhere around there. That would be a nice higher low area to be long copper. Or maybe it tests this low. If it pulls back beyond that, then you're looking at, what is this here? Basically $4.20. Now, those would be your potential levels to consider. Like I said, with FOMC coming out on Wednesday, something like copper can be dramatically affected by, if there's news that comes out that is dollar strong, right? Copper should not do well in a dollar strong environment like everything else. Gold should also pull back, and oil should pull back, and all those things. Now, like I said before, there's no room for logic in this market, and these markets are pretty much doing whatever they want right now. But that's the idea. That's how it should behave. Okay, if there's dollar strong news, something to keep in mind. Anyway, okay. What was the summary of BTC? Oh, so Moose, if you just wait till I complete the stream, you could just start the stream over and watch it from the beginning. And I speak about Bitcoin for like 15 minutes. Okay, so you could check that out there, or you could go to my other stream and you could just go to the beginning of it. I think you should be able to do that. All right, I got to wrap this up here momentarily. What time is it? Okay, a couple more minutes and I'm going to wrap it up. I appreciate everyone's great questions. And again, I apologize for the TradingView connection situation there. I apologize for that. But thank you for those that are sticking it out over there. Thank you. So, Poor Trader, can you check, do you like pickles? That's a weird question. I mean, I guess I don't really have a problem with them, but I don't go specifically buying them either. Okay, good question. Check out SECWETH. What is that? SECWETH. Is that a coin? Suck Elon. Come on. What is this? That's not funny. It's like I'm like a school teacher and then you guys tricked me into like putting up something that's going to make everyone laugh. What is that? Come on, man. Don't put that in there. This is a PG chat. This is for children and stuff. Family. This is a family-oriented chat. What's wrong with you? All right. Anyway, okay, Poor Trader. What is your? I'm gonna put you in the corner now. Now you go in the corner for disrupting the class. Okay. Anyway, I don't know who came up with that one. Todd, what is your thoughts on Tesla? What a coincidence. So here's TSLA. And, well, look at this thing. So right off the bat, it was a strong stock, but recently, more over the recent back since February, this thing has been in a range, okay? It hasn't been following the stock market, that's for sure, with stock market all-time highs, and this thing is stuck inside this range. So it is trying to produce a buying, I could say, continuation pattern. Look at the double bottom here. 620 double bottom right here, but it's inside the range. Though you can't be confused by this. Don't lose sight of the range. You have a higher low. Yes, there's a buy signal, but in order for this thing to prove itself, it needs to break this high over here, 687.20. It needs to clear this resistance right here. Okay, needs to clear that resistance. So it's a tough one because it may break and it may go. you can either look at the higher low right now and measure your risk off of the recent swing low, which is that 621 level. Where's this thing now? 658? I mean, you're looking at 40 points of risk or something like that, you know, to give it, to test this thing out. You're looking at 40 points of risk. I mean, you can always take a smaller position, or you could wait for the breakout. And if it breaks out, you know, then you could try playing that, which I'm not a big fan of breakouts, but if it breaks out, all you're looking at is maybe testing the higher portion of the range, right? So that's the way you can judge Tesla in terms of its risk. Okay, that 620, you can look at this little mini higher low, but chances are that can easily get stopped out. What is that, 647? That can easily get stopped out. So you have to keep that in mind as well. Also, in light of where the stock market is, I would think this thing should be performing better. So what's up with the relative weakness? The S&P all new time highs, and this thing is stuck in a range? That's not the best sign, okay? So just something to keep in mind there. Thanks for asking. It looks like it's setting lower highs, but not going anywhere. Right. Well, now notice you're focusing on the lower highs, which is true, but you also don't lose sight of the lows, right? Look at the entire structure. This is not, lower lows is true, but it's not a bearish trend. This is not a bearish trend. All right, even over here, some people would argue, oh, a bearish trend, that's a bearish trend. It's not a bearish trend because it has not taken out the structural low. It's a bearish retracement, bearish momentum, but a trend takes out lows, like serious lows, and makes lower lows and keeps doing that. This is not doing that, right? It's making higher lows, and it's just consolidating. So just something to keep in mind there. Thank you for asking about that, because that can be confusing for people. All right, let me see what else we got here. Okay, Poor Trader, no problem. You always get one guy, Poor Trader. I understand. You know, it's got to be the wise guy. It's okay. Ramana, I know you have, but can you show resistance and support levels on Bitcoin? All right, real quick for Ramana, because Ramana's a long-time follower and regular. And can I get a BTC chart? How about that? Okay, there we go. Well, so the support and resistance, in fact, I shouldn't even have to show you a chart. I should just remember. I mean, you're looking at 30K, right? Between 30 and 28.5 is support. Right now, 35K area, that midpoint is now a support. 40K to 41K is now is the range resistance. That hasn't changed in a long time. The only change we have is 38K was taken out, that minor resistance, and here we are now where that area can basically become a support. What's today's high? 40 half. Okay, so it didn't touch 41 half, but look, I mean, it's in the same vicinity. It's in the same area. Look at this. It's in the same area, right? Look at that tail. Is it a coincidence that the tail is developing there? No. So those are your levels on Bitcoin. Thank you for asking. No problem. I'm more looking at the low at the 550. Do you think that the pattern from February is suggesting a break of the low or push higher? No. So Todd, I answered that question about Tesla. Basically, I anticipate the push higher. Now, that's based on the fact that the consolidation on Tesla is these consolidations, these triangles, are typically trend continuation patterns. And the broader trend is clearly bullish, right? There's nothing bearish about that. Now, it doesn't mean that there's a guarantee that it's going to break higher. So the way to treat something like that is if it breaks the lows, if it starts taking out the lows, which is something that it really shouldn't do, then you're getting your bearish confirmations, okay? And it can go back to the lower part of the range. But until it clears that range, you have to suspect or anticipate that it will stay in the range, okay? Until it proves otherwise. Just like with Bitcoin, right? Everyone was bearish and bearish and bearish and bearish. Bitcoin's breaking lower. How many people would come into my chat here? Oh, Bitcoin's going to break lower, right? How many people said that in my chat? And then here we are. We're higher. And what do I tell people? I'm not trying to tell people that I'm right all the time. What I'm trying to tell people is don't have an opinion because it'll steer you the wrong way. I always ask of the chart, what is it not doing? And it was refusing to break 30K. It was trying, and it could have broken 30K. But the thing is, it chose not to. If it broke 30K, what would I do? I'd be like, okay, it cleared it, right? 28.5 is cleared, and 26K is next. I adjust, and then I look for buying activity around 26K. In this situation, right, we cleared the other way, and we're testing 40, 41K. Okay, fine, testing it, still in the range. I'm not excited about this because it's still in the range. We close above 41K. We're by Wednesday, Thursday, we're at 42, 43K. Okay, then I'll be anticipating 50K at that point, based on where the momentum is likely to take us next. Okay, with always keeping an open mind as to what can go wrong, and it's always about what should it do if it's strong, and what should it do if it's not strong. Right? You're always asking, what if this and what if not this? And that can help give you a lot more perspective, or at least be prepared if it gives you a different look. And instead of reacting to it, you've thought about this and you know how to adjust. There's a big difference, right, between that and then seeing something, oh, look at this. And then you turn on, oh, look at the news. Oh, my favorite guru said that, I'm buying it. Right? That's a reaction. And that's what you want to avoid. Okay, so, okay. Okay, cool. All right. So that's pretty much it. I got to wrap this up now. So I want to thank everyone for your great questions and your great participation. It's always nice to see everyone, from all the different countries, and also giving different symbols to look at, symbols that we might otherwise not see. All right. I always get a couple of symbols in here that I may not be paying attention to, and we get to capitalize on having many eyes looking at many different markets. So that's great. I really like that. Okay, so thank you all again for your great participation and spending some time with me here on this afternoon. I know it's some crazy hours in different parts of the world, so I appreciate that very much. Okay, so hey, every Monday I'm here. I simulcast on TradingView, and I'm on the YouTube thing here. So you guys catch me then. I apologize if there was any streaming situation here with the TradingView. You might want to ask them about that, because like I said, I don't see any problems with my stream over here. But I appreciate all the feedback on that. It's very helpful and useful to know. All right, so again, everyone, I want you to enjoy the day or the evening, wherever you are in the world, and thank you very much for watching.